Hey there, and welcome back to the channel. Now, maybe you've heard of the term Fidelity Index Fund thrown around by your financially secure friends, or maybe not, but you didn't really get what they are all about. And that's totally fine. Let us break it down for you. Fidelity Index Funds are one of the simplest and most reliable ways to grow your money. Essentially, what these funds do is that they track and replicate the performance of specific market indexes like the S&P 500, the total market, or US bonds. By the end of this video, you'll know exactly how to get started. In fact, we're laying out the 6 best Fidelity Index funds you can invest in right now to make the most of your money. We've done the research so you don't have to. Just sit back, relax, and let's get into it. We start off with the Fidelity 500 Index Fund, or the FXAIX for short. This fund is basically a mirror of the S&P 500, which in case you didn't know, is like the VIP club of America's top 500 publicly traded companies. But what really makes FXAIX a big deal is its impressive average annual growth of about 10.2%. With this kind of annual return, your money isn't just sitting there, it's working overtime for you. To illustrate my point, assume you start with $50,000, and here's what happens. After just 1 year, assuming that 10.2% growth holds, of course you're looking at about $55,100, which is $5,000 of pay in just a year. But stick with it for longer, let's say 3 years, and your initial $50,000 grows to around $66,553. And if you are really patient and keep it rolling for 5 years, your investment will skyrocket to more than $81,000. Another thing that comes to mind when talking about FXAIX is that its rock bottom expense ratio, which is just 0.015%. That's extremely low. It virtually means all your money is going into the market, not into someone else's pocket. So whether you're just starting out or leveling up your portfolio, FXAIX is a reliable pick which will put you in the driver's seat of America's economic engine. Next, we've got the Fidelity Total International Index Fund, or the FTIHX. Think of this as your passport to investing in the markets that are outside the US borders. It is basically like having a diversified portfolio that stretches across Europe, Asia, and even emerging markets in Africa. And that's all without ever leaving your couch. Enough hype. Now let's talk performance. Well, over the years, FTIHX has delivered an average annual return of around 5%. Sure, it might not match the blazing speed of the US focus funds like the FXAIX, but it makes up for it by diversifying your portfolio and lowering your overall risk. After all, we're talking about the entire world here. Now, let's crunch some numbers. Say you put $50,000 into this fund, and after 1 year, with that 5% growth, you'd be sitting at about $52,500. Stick with it for 3 years, and your investment could grow to around $57,881. 5 years, and you're looking at a tidy sum of $63,814. Not bad for global market exposure, right? Plus, with an expense ratio of just 0.06%, almost all your money goes towards growth. So if you're looking to diversify and take your investments global, FTIHX is like a world tour for your portfolio. Now let's talk about the Fidelity Small Cap Index Fund, or the FSSNX for short. This fund is your ticket to the world of small cap companies, which are those scrappy, ambitious businesses that might not be household names yet, but definitely have the potential to grow into the next big thing. So it essentially bets on the underdogs of the stock market. Here's the thing though, over the years, FSSNX has averaged an annual return of about 8% over the last 10 years, which is pretty impressive, but not quite surprising, since small caps are known for their growth potential, and this fund is the master in capturing the best of them, but it also spreads them across a variety of industries to minimize the risk of failure. Now, let's hop into the fun part, numbers. If you invest $50,000 after 1 year at 8% growth, you'd have around $54,000. Keep it for 2 years more, and it could grow to roughly $62,986. Stick with it for 5 years, and you're looking at a solid $73,466. The expense ratio is also super low at just 0.025%. This allows you to invest in the fund and get high growth at a minimal cost. Now let's dive into the Fidelity Total Market Index Fund, or the FSKAX. This fund is the all-you-can-eat buffet of investing. It covers the entire US stock market. Really, we're talking about everything from giant companies like Apple and Microsoft to the mid-sized movers and small-cap upcomers. It's all in here, making it a one-stop shop for total market exposure. Performance-wise, FSKAX has averaged an annual return of around 10% over the decades, which is solid since it mirrors the broad market, meaning you're riding the wave of the overall economy. And if you invest $50,000, after 1 year at 10%, you're looking at $55,000. Stick with it for 3 years, and it grows to about $66,000. Stay with it for 5 years, and you've got over $80,500. And the expense ratio? Just 0.015%. It's insanely low, so more of your money goes to growth instead of fees. FSKAX is like the Swiss Army knife of investing. It is versatile, reliable, and perfect for any portfolio. Now, let's talk about the Fidelity US Bond Index Fund, or the FXNAX for short. This fund is your go-to if your goal is stability, because it focuses on US investment-grade bonds, which are basically loans to the government or those top-notch companies. Think of it as that steady, responsible sibling in your portfolio that'll make your investments flashy but rock solid. Performance-wise, FXNAX has delivered an average annual return of around 4.5% over a 30-day yield period. While it's not the jaw-dropping growth of stocks, it's reliable, especially during market turndowns when bonds tend to shine. Now, let's crunch some numbers. And as usual, if you put in $50,000 after 1 year at 4.5%, you could have about $52,000 in the bank and just hold it there for 3 years, and it can grow to roughly $57,000. And after 5 years, you're looking at $62,711. And with an expense ratio of just 0.025%, almost all your money goes towards building wealth, not paying fees. Let's wrap things up with the Fidelity NASDAQ Composite Index Fund, or just the FNCMX, which tracks the NASDAQ Composite Index, a home to tech giants like Apple, Microsoft, and Tesla, plus some of the most innovative, fast-growing companies in the US. When you start seeing how it performed over the years, though, FNCMX really stands out, in which it has delivered an average annual return of about 16.9% over the last 5 years. That's some serious growth, especially if you're ready to embrace a little more risk. Now, if you put in a little calculation, your $50,000 will be $58,000 after 1 year. Hold it for 3 years, and your portfolio could grow to $79,875. And finally, hold it out for 5 years, and you're looking at a hefty $109,000, which is just amazing. And with an expense ratio of just 0.29%, FNCMX offers strong growth at a reasonable cost. And there you have it, 6 of the best Fidelity Index funds to consider in 2025. Each fund offers unique opportunities, whether you're chasing the growth of tech giants, diversifying globally, or betting on small-cap up-and-comers. The key here is balance and mixing different funds to suit your goals and risk tolerance. Remember, investing is a marathon, not a sprint. So stay consistent and let compound growth do the heavy lifting.